does. Scott Bauer on the floor of the CBOE, and you're right there on the in the trading action. What are the flows? What are you seeing on a day like this where we got the hotter than expected manufacturing inflation number?
It's actually unbelievable, Liz, because you would think with all of these hot numbers, with Mester coming out, being as hawkish as we've seen anybody be recently, with the retail sales number that we got earlier in the week, and then the jobs picture, why is this market continuing to hang in there and grind higher? Why did we make that rally back today? Well, the order flow back here, very, very heavy on the call side still.
Explain what that means.
Flow,
those guys behind you, let me interrupt you. Those guys behind you, explain what that means to our investor audience who might not know the call. What does that mean?
Absolutely. Absolutely. So this is the S&P 500 option pit. So all of the S&P 500 options that are traded come here to the floor of the CBOE. These guys are taking the other sides. They're the locals, the market makers. They're taking the other sides of all of the investor, all of the retail order flow, institutional order flow that comes down to the floor here. There is a large amount of call buying out 3 months from now, 2 months from now. So there is some still upward pressure to the market, even with all of these negatives, if you will, in the face of what's happening here with inflation and rates, et cetera. And it's really unbelievable. And my take on that is, I'm a trader, I'm not an economist, but my take on that is that people are getting complacent that 5% now, 5.25%, whatever it may be, that's the norm, and that the market, that the market and the economy can handle it. And that's why you're seeing some of the big tech and big growth names really start hanging in there, but I'd be a little careful about those names. Okay.